Welcome to the Trading Lounge and the Day Ahead report, and here we're looking at the US 30, the DJ, and look, things are going pretty much according to plan. We were looking for some type of reaction from the 13,000, and we can clearly see that we've got like a nice three-wave pattern there. So an A and a B and a C, and the 5 waves in the C wave look quite nice as well. So it's fitting quite nicely. We should make new highs here. That said, 13,000 is a big number, so it's likely to have a few problems. And the likely problem is that we'd probably be looking for 5 waves up through here somewhere, and then a sort of 50-60%, 30, 40, 50, 60, something. It's a bit hard to say. Retracement level, and then a move up from that there, and a first high above the level, and then and a move back down. So we should be seeing more corrective patterns across the 13,000 there. Just to have a closer look at that in there, this is the situation here. So we were looking for, I thought it may have only come down to this point here, but it's, as mentioned, everything is being sort of headline driven at the moment. The Speaker of the House mentioned last night that there would be some resolution to the fiscal cliff, so there'll be more news coming out on that obviously next week. And next week also too is quite a big week in terms of announcements as well. Central banks will be having their interest rates announcement, and the RBA will be on the Tuesday, so we'll see the Australian dollar being run up by the rumour sell the fact type of things. There's also a lot of manufacturing figures coming out next week too across the world, and also employment figures are coming out, non-farm payrolls later during the week, but other countries have them as well. So the employment rates and manufacturing, China's got manufacturing figures coming out on Saturday morning, so just at 12 o'clock our time. So just sort of check back in and check what they were, because they will impact on the Monday as well. Alrighty, so look, everything's pretty much on track. All markets are sort of following each other to some degree, but we feel like the market's going to be sort of edging higher, but they need to work through their closest, largest numbers, and the S&P 500 has got to work through the 1400 here. It's had an equal swing across the 1400 here, pretty roughly anyway, so we should see it move further to the upside, but it would need to, as the Dow hits the 13,000, this will obviously meet its highs here as well, and check back in. But given enough time, now we've got a range on the 1400, so the 1400 will become the balance line here. So any checking back in through here and then support would see the further upside there. European markets are pretty much the same as well. The FTSE here, it's got a sort of a cleaner three-wave corrective pattern in terms of the A, the B, and the C. And look, it will find sort of support on the because each markets the trends and corrections of different degrees, and this is 1 degree up through here. So yes, it can go higher, but it would need to check back in, and that support on top of subgroup 1 would see further upside, and we do expect that top to be taken out there. The DAX has already made a new high above that, as you can see here. So that is a positive move there. We'll just get a bigger picture of that there just to lay that out. So longer term traders in the DAX should be long above the 7,300, and we'll be looking for a move to the 7,500. So it's still a fair way up here yet to go. So we had a nice trade last time from the 7,000 upwards. So all's well there. So the Australian market, this is just the daily chart of it here. It can be counted in different ways, and I understand that, but still looking for a move back above the 4,500 there. It is struggling as such, but it seems to be going okay. The move yesterday, this is the move yesterday here on the daily chart for the ASX 200. It was down, but it was down on lower volume, and that was the real key that we were looking for as such. We were looking for if it was going to be lower, then we want to see it on lower volume, and that simply means that nobody wants to sell, a lack of sellers. And Wednesday, as mentioned, was a V-shaped day where it opens and trades down in the morning session and trades up in the afternoon session. But normally on the Wednesday, it would normally create a new high, so didn't quite do that, but still had the basic sort of V-shaped pattern. Thursday can open higher and trade lower, so Thursday is known as the bear day, so just got to be mindful of that. So when working with the CFD here, so to speak, you need really to, if I was long in here on, if I thought that was support, and I was going long in through here, if it dropped below the level here, then I'd simply be out. And that's the same thing you need to do here in your own way, in own time. You need to recognise support in this on the 4500 here, and then look to the long side there. There's going to be still going to be lots of resistance up at this level here at the 4472 area here, because obviously the Dow will be working with the 13,000 and so forth through that as well. Alrighty, let's have a look at the commodities, which have been reasonably stable, except for oil, which has moved down, which that was expected if you've been following the wave count on that. But copper has been stable, which is the main thing we're looking for. Okay, looking at copper here, I mean, there's been a fair bit of movement in the markets last night, up and down, and copper was the same as well. It moved down. We talked about the 48 here yesterday as being the first level of support, the trading levels of the next degree lower, and that's held quite nicely. I've left this trend line in through here because when it's broken like this, it normally becomes the resistance through here. So if it works itself lower through here and finds the 350 as a retested resistance, then there's weakness in that move there. So that would be one degree of weakness, and then finding the 348 as resistance as well is another degree of weakness. And this is important in the sense that the metals, the copper is quite central to the base metals and also quite central to the materials sector, of course. And some of the trades that we're looking at will be in that sector. So this is a very easy way to looking at something as support or resistance above or below the level is a very easy way to look towards adding positions or reducing positions in a market, essentially to manage risk. So that can be quite helpful. I'll just leave the wave count as is for the moment, because there's a couple of ways to count that, but while it's basically sticking to the 350, then it's positive at this stage. Yes, there will be more corrective patterns in here as it dances around this particular number, but we want to see which side of the fence is going to sit on, and then that will give us the bias in that particular direction. The oil market, right, this is a daily chart here. While we're here, we'll have a look at this. This is just the triangle pattern that we've been following with oil. And as you can see, it's working its way in. Still expecting a low to come in through down here of wave E. Triangles are 5 wave patterns, and we label them A, B, C, D, and E, and we're still in the E here. The 85, we've got a little trend line through here touching this one and this one, so that's really cutting in at the 85 there. So there will be, just bring that in a bit closer here. That's that trend line coming through here. There will be support from the trend line and also from the 85 as well. So it makes it quite difficult to be short in this sort of area here. I mean, if you were up late at night, then you could have caught the retest here. We just talked about the trend line being in place here. As it breaks through, the breakout's not that important, but the retest is more important. A failed retest is the real key and setup to really managing the risk properly and getting the positions in place there. So but that's that. Look, the gold market's fallen out of bed. We're still sort of positive on the situation. We'll just have to sort of look at different wave counts here. But what we could say is that the 1700 would be the line in the sand in terms of support and resistance to start with. So if the 1700 became the resistance, then we can look at being bearish at that stage. But we're just looking at this in terms of So what we were looking for is, we were looking for this up for 1 and back for 2 and up for 3 and a small wave 4 back here and then moving to the upside here. It's not that we were trapped because we would have to be, as mentioned, looking for support on 1745 and then adding again on 1750. So, but still, it's thrown a bit of spanner in the works. But one of the main things that we're looking at is that this particular move up through here is in 3 waves, so it's corrective, so that's why we've labelled it a B wave here. So we'd still have this as wave 1 here, and then an A to here, a B to here, and 5 waves in a C wave to here, and the 61.8 retracement level would be still into here, into this sort of area here that we were looking at anyway. So we really just need to allow that to play out in that space. That's just what I was sort of thinking here within this, is that a little wave 4 retesting into the 1720, which is done, and then some little sort of A, B, and C in here, and then a little 5th wave down through here. The 5th wave down should be about the same length as this guy here, so we could see a price movement just below into the 1690 here. But let's see how that retest pans out through there. If it found support on the 1720 by the by, then you can glean a small position there, but make sure that you've got retested support, and then also glean on top of 1730 as well, if that's going to be the case. So just see how we go there. This little move up through here, if I got that on a smaller picture here. Nope. Okay, I don't. So, but we'll be looking for 5 waves to the upside there. This is silver, and this is on a 5-minute chart. This when I talked about the 1720 on the gold becoming support, then what we're looking for is basically 5 waves to the upside. And we've got that with silver here. We've got the 1, the 2, and then we'll have the 3 and the 4 and the 5 here. So now we're seeing like an A. This could be it here, a little bit small for the ABC, but it's probably going to be a bit larger through here. But what that does do, it does deliver an impulse wave in this direction, so that creates the buyers for further upside. So gold could certainly push up from where it is, so just be mindful of that and trade the levels to the upside. Let's have a look at the US dollar, as it's quite central to all of this, and the currencies. Okay, the US dollar. Yesterday, as you know, we were looking for a wave 4 bounce, and that seems to have come into play quite nicely. And this sharp move down here kind of helps create the top for that in there. So that's what we're looking at. We're looking for further downside on the US dollar now. Now the wave 4 can get rather wave 4s can get sideways and complicated, so we may see more sideways price action through here, but we really want it to stay below this this high price in here at the moment. So as this is a wave 4 bounce through here, then we would be seeing the opposite in the euro. So if we have a quick look at the euro, we see that the wave 4 pullback that we're looking for in here would be in place now as well. So we now need to see an impulse wave to the upside through here to make this, once wave 4 is completed in here, we should see a new high come into place above the wave 3 there. But that will of course be at 130, so we'll struggle going all through up here. This is supply area here, 1 supply area 2 here, and also there'll be a correlation between the S&P 500 and the euro as well. If we have a look at that correlation, we see that the euro, the S&P 500, and the Australian dollar is in that as well. But there's possibly a long trade in the AUD yen here. The beige book, it's not quite 6 at the moment, so at 6 o'clock, just if the US beige book is it holds steady after that, after 6 o'clock, then you could probably look at Australian dollar yen long trade at that point if the beige book comes out stable from that point. But the correlation is there. So with the S&P 500 needs to deal with the 1400, as the Dow DJ needs to deal with the 13,000, so to speak. So the euro's got to deal with this as well. So we have seen the DAX move higher, making new highs. The FTSE should follow. So this should sort of be up there as well. So just look at the lag on that there. But that's basically the wave 4 there. Just drilling into that a little bit closer through here. Yesterday, if you remember, we were counting this 5 waves down on this 15-minute chart here, and we were looking for an A and a B and a C wave coming back up into this area, more so up here, because it was like the 50 or 60% retracement level. But the B wave ended up being a bit of a sideways pattern through here, and then the last little 5 waves down for wave C, which we were looking for down at around the 129 area, as wave 4 there. So we do seem to have a nice strong impulse wave to the upside through here. Markets are trends and corrections, so even though that has been correcting for each little move that's done, the whole trend needs to be corrected. So yeah, just looking for the next session of volatility, and look for the next move up through there. The Australian dollar, as mentioned, we've got the RBA rate coming out next Tuesday, and many of the other market countries are as well. So just tune into that. What we're looking for here yesterday, as we mentioned as well, we're looking for wave 4 to come into play, and it is tricky getting corrections are the weakest point in Elliott, and it's a shame that Elliott hasn't made more rules for the Elliott wave, which make things a little bit easier. So corrections can be tricky, and wave 4s are the most trickiest because they can just expand in price and time. But we're never really that far off them. They just always chuck in that extra little wave there to make things a little bit difficult. But look, there it is. It's in play. It's done and dusted, and we are moving up there. So you know, you should know by now if support is found on 72 to go along through there. But we should see new highs made above the 105, which is brilliant because it creates a stronger upside picture, and that's what we'll be looking for. But look, so this should be reasonably positive all the way through till next Tuesday. Buy the rumour, sell the fact type of thing. Yeah, but yeah, so that's it really. Alrighty, well, just be careful of Thursdays, because Thursdays can open higher and then trade down, so you can get caught at the top quite easily. So I could be wrong, but just be mindful of that, because if you see it unfolding, then it's not such a shock. So yeah, diligence and due care, as the lawyer would say. Alrighty, good morning and good luck.